As we get ready for the StoneX Agricultural and Industrial Markets Outlook Conference this February in Cartagena, we're looking back at the key forces that define the wheat market in 2025 and what producers, traders, and end users need to keep an eye on in the year ahead. Joining me today is MikeODea, Risk Management Consultant at StoneX and a specialist in global wheat markets. Welcome, Mike. Thank you for joining us.
Well, thank you for having me on today.
Yes. We've heard 2025 described as comfortable but fragile for global wheat suppliers. From your perspective, how did the supply and demand balance actually look?
Well, the market started out with some anticipation of some production issues early in the year, but those quickly faded with sizable crops, not only in the U.S., but in Europe, and big production in the Black Sea again. And so we got through our Northern Hemisphere harvest in good shape. Then we started looking forward towards Southern Hemisphere. And the crops just kept getting bigger and bigger in Australia and Argentina. So we're going to come into the end of the year with a very big supply side, but we've got a quality problem that's starting to be more of an issue than I think the market's ready for. It's mainly because of some of the lower proteins. When you get big yields in crops, you get lower quality in wheat. So I think that's how we're going to start out this year coming in. Looking at some of those things, and those are some of the things I'm watching, not only from just a production, but new crop plantings, new crop conditions, but also the cash markets are going to be probably more in focus for us, especially if you look where the futures market's at. We've been in this rapid decline probably for the last 12 to 18 months. And we made new contract lows last week in Chicago. Kansas City did not, Matif did not, Minneapolis did not. So we're starting to build a base here. And I think if you look at what we're going to be talking about specifically going forward, it's going to be cash markets and fund positions.
Okay. So I want to touch upon Russia, which remained the largest wheat exporter in 2025, even though the exports varied throughout the year. What enabled that strength and what created the bottlenecks?
Just crop size mainly. They had good crop size. The consumer market was pretty underbought coming into harvest, so they were waiting for cheaper values to allow them to extend their coverage. And you saw some issues initially with some of the French quality on proteins. That actually created an opportunity for U.S. wheat in that kind of last half June, first part of July. We saw pretty good demand for U.S. wheat because of the lower quality of the European crops and the initial lower protein in the Russian crop. That's kind of worked itself out. The problem is the exportable supplies in Russia from the south are going to be a little lower quality and less supply. So they're going to have to drag a lot of wheat from the interior to their export facilities.
And another thing, even with the global stocks running higher, we saw wheat prices react quickly to weather headlines. What did 2025 teach the market about how concentrated those risks really are?
Well, I think the weather risk was one thing, but you also had the headline risk out of the escalation in the Ukraine and Russian situation. So I think the market also, we call it Black Sea fatigue syndrome here. So you get a bullish headline out of the Black Sea and the markets would react a little higher, but the funds would come in and sell those rallies. I think that's kind of it started to slow down a little bit, and people will start focusing back on the fundamentals of weather and supply. We've got plenty of supply, but it's going to come down to the quality of that supply.
Looking ahead to the new Northern Hemisphere harvest, what are the biggest uncertainties that the market should be monitoring right now?
The main thing we're watching right now is I think Europe's in good shape. The crop went in pretty good shape. They've got some nice moisture here lately. Southern Russia still has a little bit of an issue in the Volga. I think the central part of Russia is in pretty good shape. China's my outlier. I think that people really need to pay attention to what's going on there because that crop went in late. So they had a really wet fall and they struggled getting their corn harvest done. So there's issues with corn quality, but the wheat went in really late. So as we move into the spring, we'll be watching those crop conditions really close. Now, one thing we know about wheat, if you don't get a good stand on winter wheat going into dormancy, you will run into production, yield, and quality problems in the spring. U.S., we've got lower acres. We have less soft wheat, and we're going to have probably 5 to 10% less soft wheat acres, probably smaller hard wheat acres. So our flip will be spring wheat acres. So as we come into the spring, we'll have to see where corn prices are at, soybean prices are at, and what the spring wheat farmer does. As we move into the spring, we're going to be watching, the weather conditions very closely, but also, like I said, if we see any type of issues on getting spring wheat planted in the U.S. or in Russia, then we'll have to reevaluate. Because remember, a third of the Russian crop is spring wheat.
Yeah, understood. And from a risk management perspective, what should wheat producers, millers, and end users take away from 2025 as a plan for 2026?
I think the big thing is they were rewarded for being very patient, because as prices continue to drop through the year, I think as the market evolves, we're down against levels. So we put in new contract lows last week. We're historically low from both a price perspective and percentage in about all the markets, whether it's Kansas City, Chicago, Minneapolis, Paris. So the end user needs to be looking at extending coverage. The big thing is an end user, he doesn't want to pay carry. So as you watch the calendar spreads, the Dec March, the March, May, especially out in the new crop spreads, the July forwards, if those spreads continue to narrow up, we'll see the funds start to short cover, but also allows these end users to make more coverage out further and not pay the carries of the futures markets.
Mike, thank you so much for your valuable insights. And to our viewers, thank you for watching. If you'd like more information about the conference, just scan the QR code or click the link below.